When Warren Buffett and Charlie Munger talk, you only do one thing, and that is listen. And that's what almost over 40,000 shareholders and investors did at the annual meeting in Omaha, and a bunch of people who are watching the live feed on Yahoo Finance did as well. Well, I tried to do the same with a bunch of other experts. Remember, a lot of excitement ahead of the meeting because, one, by virtue of the annual shareholder letter that he had written to shareholders a few months back, when there were repeated points about active versus passive investing. Some key takeaways from the last year's annual general meeting, including how size is an enemy of performance, so on and so forth. So lot of expectations about the kind of questions that Warren Buffett would be asked, and Warren Buffett and Charlie Munger would be asked about performance, about what are they doing with Apple, about Wells Fargo, for example, and the meeting didn't disappoint. Started off with a fairly wrong sermon from Warren Buffett about how people should invest into assets which are generating some kind of income as opposed to passive assets like gold. And it's a fairly long explanation given. He's done this in the past as well, of course, a number of references in the past to investing in gold versus investing in businesses. And he started off this meeting with that. Then a clutch of other mentions, really. When asked about Elon Musk, for example, and both Munger and Buffett mentioned that while Elon Musk could get a lot of things right, in a funny way, Warren Buffett added that he can't beat them at the candies business, and spoke about how moats are a fairly important part in businesses, and being a low-cost producer, for example, in a certain of the businesses that Berkshire Hathaway is, Geico, for example, is a moat that is here to stay. There were a lot of other references as well. Wells Fargo, the question was asked about whether if Wells Fargo is a chronically leaking vessel, when would they consider moving vessels? And both Warren Buffett and Charlie Munger, naturally so, expressed confidence that what Wells Fargo has undergone through will only make it stronger and better in the years to come. They mentioned that they were fairly happy with the investment as well. A really funny moment came in wherein an investor asked them about whether they believe that there will be an opportunity to make money in the public sector, capitalism in the public sector versus comparing it to what they've done in the private sector. And Munger started off saying that that's too tough, why don't we go to a new question? And Warren Buffett added that I've got nothing to add, to be fair, it's an entirely different game. So kind of tipped their hand about what they think about investing in public sector companies versus private sector companies as well. Some standard questions about what do they think about the trade relations between US and China. And it was interesting because here Warren Buffett and Charlie Munger started off saying that don't look at what's happening to interest rates and geopolitics, etc. Invest for the long term. And some of the questions came in about the very short term, about what will happen about the trade war situation between US and China. But that is to be anticipated. My key takeaway, I think, was really about when asked about the healthcare JV between Berkshire Hathaway, Amazon, as well as JP Morgan, and when asked about what could happen, will they be able to penetrate the pharma industry? Warren Buffett saying that there is a big moat that stays around that business, and we'll try to attack the moat, and saying jokingly that if we fail, then he hopes that somebody else does go out and successfully attack the moat as well. But again, reference to some of the basic tenets of investing. All in all, a fascinating first 3 hours of the Berkshire Hathaway annual general meeting. In fact, we managed to speak to a few investors, including Rajiv Thakkar of Parag Parikh Financial Advisory Services. Hear out what he had to say.
He's been reiterating it in various forms over the years, and I believe today's example was very, very vivid in terms of $10,000 invested in, let's say, 42, being more than 100 times the value of gold if you were invested in equities. So that was, I think, really vivid. You can't get it better than that. So $51 million versus 10,000 invested, and just about, let's say, $400,000. So I think if this does not drive home the point, nothing will.
Yeah, and I think it was an attempt, right, at the start of the meet to tell people that keep this at the back of your mind whenever going out and investing, that don't invest in non-productive assets. Buying good businesses will always hold you in good stead if you hold them on. So I just thought it was fairly interesting that I started off with a really long piece on the merits of long-term investing at the start of the meeting.
True. And this was one point. The other point that he reiterated is people will ask me various sorts of questions and everything is fair game. But number one, I do not know whether Fed is going to increase interest rates or not, or how many times and things like that. And even if I knew, how does it matter? So when you are looking at buying ownership stakes in businesses, focus on where the business will be 5 years, 10 years, or even longer out, rather than worrying too much about what is topical or the macro stuff.
Well, in a funny way, I thought the question wherein somebody asked about, are you semi-retired, and if not, explain how. And Charlie Munger and Charlie Munger's comment that part of the Berkshire secret is that there is nothing to do, and Warren is pretty good at doing nothing. But I think they also try to emulate, say about it in a lot many ways, that if you sit with your investment and pretty much do nothing, then the investment will grow further. Do you experience that in your investing as well?
That is true. So again, they have explained it in a very vivid manner elsewhere. They said that, let us say there were only 5 investors in a room, and they owned all the shares in US companies. And just to keep themselves busy, they kept shuffling ownership stakes from one to the other. It would only make the brokers rich, because on an average, they'll earn the corporate profits of corporate America.
True.
So each time you buy and sell, you pay brokerage, STT, you may end up paying capital gains tax and things like that. So rather than just churn for the sake of churning or at the smallest of stimuli, stay put. And he gave an example that you would be very rich, but your broker would starve to death.
Yeah, and you'll have to attend the funeral or something like that. It's a very funny comment. One question wherein somebody asked them, a Chinese investor, I believe, asked them about whether do you think that there's a win-win situation for both countries, or the world is too small a place for both to win. Did you think that it was an answer that could have been given at a forum like this? I mean, there wouldn't have been a different answer that could have been given at a forum like this. He said that both the countries are not foolish and they will find a way. I mean, what else can you say?
So the very interesting part was that his prepared remarks were on actual world war, where people were killing each other. And he says, don't focus on that. And the first question that comes from a shareholder, the other two were from journalists and analysts. The first question from a shareholder is, what about trade war? Which is a small thing. People are sitting across a table trying to negotiate, things like that. So one is, I take your point, to an extent he has to be politically correct and not criticize countries. But this has been his view for long. And even Bill Gates and Hans Rosling and all, world is becoming more prosperous, and he focuses on individual businesses rather than these headlines that come as stimuli.
Yeah, true. I thought, a couple of things to learn from both their responses and elaborate responses on Wells Fargo, right? Everybody expected this question to come around in the AGM, in addition to, Wells Fargo, whatever, a couple of others, Apple, I mean, and all of that. But I think there were more than 1 or 2 things to learn about it. I saw your tweet as well, where immediately post the replies came in. But tell us, what did you make of that little dialogue of the Q&A on Wells Fargo?
So he's spoken about this in the context of, let's say, American Express in the past, or Solomon Brothers and things like that. See, an individual is not an organization, or even a department is not an organization. Now, in organizations with tens of thousands of people, or maybe hundreds of thousands of people, there will always be someone somewhere doing something wrong. And he's said it even in the context of Berkshire Hathaway, that something bad would come out someday. I don't know what it will be, but I can guarantee you it will come out.
Yeah.
So he says that key point is whether that thing is fatal or not, and whether that thing is corrected and corrective measures are taken or not, and finally, what is the path ahead for the organization. So focusing unduly on one particular event, bad event in the course of an organization's history, is not that great a thing.
So that was Raji's view, and you can get a bunch of other views on our social timeline as well. But I'll just end this piece by telling one thing. There were 2 questions which are related to the constant chatter about what will happen to Berkshire Hathaway after Warren Buffett retires, or who will take over Berkshire Hathaway as well. I think 2 questions. One question was asking about directly to Warren Buffett that are you semi-retired, and if not, please explain. And Warren Buffett, or rather Charlie Munger, said that part of Berkshire's secret is that there is not much to do, in a joking way, of course. And he said that, you know, Warren is pretty good at doing nothing. But I think they tried to refer to the fact that Berkshire Hathaway will continue to remain an investing animal even without Warren Buffett and Charlie Munger. And I think Charlie Munger, yet again, to another question being asked, did mention that those of you who sell the Berkshire Hathaway stock after we are gone, which means after he and Warren Buffett are gone, and try to invest their money somewhere else, will be worse off. So they are fairly confident in this juggernaut rolling, irrespective of who is at the helm of affairs. Well, it was a very interesting AGM, and I loved watching it. And if you missed parts of it, log on to the Bloomberg Quint website and try and get excerpts of the key highlights as well.